Welcome back to another webinar, everyone. So this is the Trader Development webinar. Once again, just to recap what this webinar is, we have this webinar once a week. In this webinar, you guys can ask any questions related to trading psychology only. So if you guys have any questions related to trading psychology, please ask those questions. But if you have a full trading question, ask that in the Q&A webinars that we have on a weekly basis. Now, in this webinar, we are going to cover a very important topic that a lot of people have asked me to cover. And then after I break this topic down and I explain it, I will then go over any questions that you guys have or any issues you guys are having related to psychology. Now, in this webinar, we're going to go over how to build trading confidence again after losing a lot of money. So what tends to happen with the few people that start trading is they end up losing money. And when you guys are trading, when you lose money or if you lose money, especially as someone that first started out, that messes with you a lot psychologically, and that loss affects you in so many ways, which kind of traps your trading progress. So once you jump into the trading world and let's say you lose $1,000, $2,000, or you even blow an account, your confidence gets completely shattered, and it becomes very, very hard for you to ever progress as a trader. Now, for people that have never traded, for people that have never ever really kind of lost money yet or haven't jumped into it, you have to understand this is a very, very important thing, which is why I tell people when you start out, you want to take it very, very slow, right? So let me break that down. Now there's two components, right? So there's two components. So let me actually do this. Let me trade this. Let me remove that to right there. Now there's two components. Now in component A, that's where someone has already been trading, right? He's a trader. In component B, right, this person has never traded. So these people that have never traded will never understand how much this affects you until they go through it. So if you're someone in situation A or your component A, you understand that when you lose money or you blow a trading account, it affects you a lot psychologically. If you're in component B and you've never traded, a lot of people take this lightly and they're like, oh no, if I lose money, I'll be fine. Or I don't care if I lose money, or I'm not gonna lose money, right? Obviously we don't wanna lose money, but if you ever get to this point, which we are trying to avoid, if you are in situation B, you have to understand this point right here sets you back a lot in your trading journey. So if you are in situation B and you haven't ever traded or you haven't used real money, I'm not trying to scare you, but I'm just trying to make you aware and alert you that if you get to point A, it becomes very, very hard to move forward. Not saying you can't, but if you're here, you should take the trading steps as a trader very, very seriously. Meaning that if you have never traded with real money, you should understand that you shouldn't enter the market looking to make $1 million off your first trade, looking to make a lot of money the first few months, right? You have to understand it's a process and you have to respect that process. If you don't respect that process and you try to accelerate it, right, and it doesn't work out well and you try to take shortcuts, you putting yourself in this situation is already going to put you behind. So you as a trader, right, if you are in component B, you want to make sure you don't take shortcuts. You want to make sure that you don't do anything that's going to put you in situation A. And obviously when people start, no one is looking to be in situation A where they lose money, blow up their trading account. But there are certain skills and habits that people perform that kind of put you in that situation, such as emotions, such as not knowing your trading style, such as not being properly educated, and so many other factors that put you in component A. So if you're in component B, once again, we want to avoid it and we want to take the long road on understanding the market, understanding trading, and taking it step by step instead of trying to become a professional trader right away, right? So that's for everyone that is in this situation. Now, avoiding this situation, let's say you are someone that's in component A. You're like, cool, I started a month ago, I started a year ago, I started 5 years ago, and I lost 5,000, I lost 6,000, whatever amount it is, right? I blew up my account, I blew up 3 trading accounts. How do I progress? How do I move forward from that, right? Now, when you lose money in trading, right, it psychologically hurts you a lot. Even having a small trading loss of 50 bucks, 10 bucks, or even just having a red day affects you. But if you consistently have been losing money, if you have blown accounts, even one account or multiple accounts, getting back from that right off the bat, I can tell you is hard. I understand how hard it is, right? So let's put it out. Let's kind of lay it out and understand the dynamic, and let's break it down piece by piece. So depending on who you are, where you are in this situation, we can kind of work on it and build from there. So you start trading. Let's say you start trading with $5 grand. Obviously, as a new trader, when you start trading, you're very reckless. You don't have a plan. You think you know it all, and you're just trying to get rich overnight. So what happens with majority of people that start out is boom, they lose money. After they lose money, they go on a downward movement and they consistently lose money. Now, some people lose money. Let's say their account goes from $5 grand to, I don't know, let's say 1,800. They go, okay, I lost money. I lost about 3 grand. Let me add more. They add more. Same concept. They add more. Same concept. In this situation, you've technically blown about 2 or 3 accounts. Now, some people are scared at 1,800 to add more. It's like, no, I don't want to add more trading. I'm done. I'm finished. Yada, yada, yada. And at this point, their trading career has been done. And I've met a lot of people that have traded for a few months, and the moment they lost money, they stopped trading. Then 2 years later, they came back to trading. They lost money. 2 years later, they came back to trading. And it's a constant cycle, right? Now, if you're someone stuck in this cycle, you have to understand that, the moment you try to start again, right, there's a few things you have to outline for yourself as a trader before you can ever move forward as a trader, especially if you lost money. So let's break that down. Now, 5,000 to 1,800, you lost some money, right? Your confidence is shattered, right? You're like, oh man, what am I doing? I'm lost, yada, yada, yada. Now, 2 things. If you quit, cool, fine, you quit, which I don't obviously recommend because you're not gonna make money right off the bat. Or B, you wanna say, you know what, I lost money, I wanna fix it. Now the question is, how do we fix it? What do we do, right? The first thing is we have to understand, okay, why did we lose money, right? Why did we lose money? Why did we have a huge drawdown? Now the why factor for everyone is gonna be different. Now, some people lost a lot of money because they're not educated, right? They don't have the proper resources. They don't know what they're doing. So obviously, one of them is education, right? People enter the markets. They're like, oh, I don't know what I'm doing. And they think they can just make easy money. So they don't have the proper education. They don't know, how to trade or whatever the case is. So they don't have the right tools. That's number one. That's the most common. Now, some people, are kind of past the education aspect. Some people are like, hey, I know how to trade. I think I know how to trade. I've learned from this or I learned from that. I read books, yada, yada, yada. It's like, cool, you have the information. That's phenomenal. The information is there. Now, do you know how to connect the information, right? That's the second concept that a lot of people lack. A lot of people think that, hey, if I just know about the markets, that itself is enough. That's not enough. You need more than that. You need to be able to connect the pieces. You need to be able to connect the education, because there's so much information in the marketplace that, you just knowing is not enough. You just need to know enough based on how you're gonna trade, right? So if you're scalping or you're day trading, right, and you're not holding positions overnight, you're not swing trading, there's a lot of indicators that you don't really need, and you're not gonna need. So you not even knowing about them or knowing how they work is good. You don't need to know that, right? So a lot of people, once again, have the education, but their problem is they don't know how to connect the dots. Now, let's say you're someone that's like, hey, I got the education, I've connected the dots. There's times I call out good plays, I have good trades, cool. What's my next disconnect? The next disconnect people have is risk management, right? Now, once again, like I said, you have to understand what your problem is. Why did you lose money? Risk management, right? Is it risk management? Now, this is a huge step again for a lot of people. Their issue is risk management. They have the proper education. They know how to connect the dots. They know how to find good plays, know where to get in, know where to get out. But their position sizing, right? Their stop loss area, all of these things are not aligned. They're bad. They're not making sense. So they take on a very large position. They're not exiting when they're supposed to. They're not taking profits when they should. So this is the next step that a lot of people are losing money in. Now, obviously, the deeper you go, the more advanced trader you kind of are, the higher the level you are. Most people at this basic level know nothing about trading. Here, they start knowing a little bits of information. They've traded a little bit. They've had a little success. They've lost a little bit of money. Here, they get to like more of an advanced level, right? But they're still missing the risk management aspect, money management aspect. And then the fourth aspect it goes down to, where I think a lot of people mess up, that's a very important one. It's psychology, right? A lot of people lack this in the psychological aspect, right? It's psychology, right? I'm just gonna put mindset. Their mindset, right? This is the fourth reason a lot of people mess up. Now, if you're someone, once again, just to refresh, if you're someone that has been trading and you're having a hard time moving on from a trading loss, or you're having a hard time building confidence after losing a lot of money or being wrong in a lot of trades, number one thing you want to do is why. Okay, why am I losing money? Why have I lost money? Is it education? Is it me not being able to connect education? Is it risk management? Is it mindset, right? Which one is it? Now, mindset, it goes back to, you trying to make a lot of money in a short period of time. You're starting off with, let's say, 5,000, and you're like, my goal is I want to make 100 grand this month. I'm starting off with 5,000. My goal is to make 100 grand. Wow, why do I keep losing money? Because you're setting such a high goal, right? Without even having the base work established. You've never had any trading success. Your goal should not be to make 100 grand. That shouldn't even be a goal. So that goal is already throwing you off as a trader, right? Another mindset aspect could be you're not taking profits when you should. You're not exiting when you should, which kind of lies in the risk management. But some people have the proper risk management applied. They have the plan, but the execution is what they have an issue with. So this is the fourth thing, right? Mindset. Now, you need to understand why. You need to understand the why. You need to understand what step you're in. Now, if you're on step 1, you're going to face step 2. If you're on step 2, you're going to face step 3. If you're on step 3, you're going to face step 4. You're going to face all of these steps as a trader. Some people are able to get to this step in 3 months, some in 2 months, very few people in a month, a lot of people 6 months, 8 months, some people even in a year or 2 years, right? For me personally to get to this point of being consistent, it took me around 2 years, right? It took me 2 years because this part right here took me a very long time. The education aspect was one that took me months and months because I had all the education. I didn't know how to connect it. So this right here took me a very, very long time. So when I finally figured this out after months and months, then I kept having good trades, but my risk management threw me off a lot. Then when I got the risk management thing down and I had everything perfect on my plan, the mindset threw me off. Like, okay, why am I not executing my plan, right? Why am I saying I'm going to take losses here, but I'm not? Why am I holding, right? I'm up $1,000 on a trade. I'm up way more than I anticipated. Why am I not taking profits? Why am I not executing? Why am I scared? All these things, right, which was a mindset process, which took me about 2 years to kind of get over everything, right? So these are all steps you have to go through. So that's number one, why. Once you understand the why, once you understand where you are and you identify the problem, the next thing we want to do is we want to attack the problem. We as traders want to attack the problem. We want to attack and say, okay, where are we? Now, obviously, depending on where you are, it's going to be a little bit different. Your whole thing's going to be a little bit different depending on where you are. So let's say in number 2, it's education. Obviously, you got to educate yourself the proper way. Let's say you get educated, you go, you watch YouTube videos, you read books. Next thing is you connecting the dots. What type of trader you are, how do you want to trade, what information do you need, what information do you not need to filter out the BS, focus on the important stuff. Once that's done, then you obviously have to implement risk management, right? The risk management concept, a lot of people are thinking, well, it comes in education. Yes, in education, you learn about it. Learning about something and implementing it are 2 different things. So in number 3, risk management, you implement it. You make sure this is good, this is working out, and then you face the 4th one. Now, as I mentioned, in each and every single one of them, different stages, different problems. Get the proper education, connect the dots, risk management, and then mindset. Me personally, I think the hardest one is probably mindset, and then another hard one is probably connecting the dots, right? Connecting the dots and the information you have, knowing yourself, understanding yourself. Now, identifying why and then attacking the problem. Now, the main issue that people face is when it comes to mindset. Now, the issue with mindset is like, okay, this is the problem I'm having. I'm having a hard time building confidence. So now what we're going to do is we're going to act as if everyone has the education, they have connected the dots, you have implemented risk management, but the mindset thing is what's holding you back. And that's primarily the main reason a lot of people are losing money, especially people that are a little bit more advanced. Obviously, if you're just starting out, probably don't have education, you probably are not well connected with education, and you have not implemented risk management. Now, the mindset aspect is what we're gonna break down. Now, obviously, psychologically, when you're down on a trade, when you're losing money, you're going to go into survival mode. We as humans go into something called survival mode, where we're like, oh shit, we started with 5,000, we're now at 2,000, right? Oh my God, you know, your survival instincts kick in, and that immediately starts affecting you. That starts making you take on bad trades. You start thinking, okay, if I take this one trade and I get it right, I'll get my account back to 5,000, right? So you start thinking in like a very non-good trader way, right? And then as you start doing that, your 2,000 account starts going down. So in that full mindset aspect, what you guys have to understand is one thing that you want to do is, if you did take your account from 5,000 to, let's say, 2,000 or 1,500, do not add more money. Like, don't add more money. Don't add money, right? A lot of people make this mistake. They add money. Don't add money, right? Don't fund your account. Do not go and do not fund your account, please. If you take your account from 5 to 2,000, cool. Let it be 2,000. Stay at 2,000. You're adding more money because you're trying to be at the 5,000 number again, or you're adding more money because you're quote unquote trying to make more money. Stay at 2,000. Now, the goal here, after you've identified what the problem is obviously to try to work on it. Now, the education part, the connecting the dots, risk management aren't the hard part. The hard part is the psychology and mindset. Now, what you have to do at this level, one thing that I advise a lot of people to do is do not think about what you had in your account. Do not sit here and say, well, I had 5 grand, I now have 2 grand. No, you have 2 grand. That's it. Like, you have 2 grand. You don't have 5 grand. You have 2 grand. What do you have now? Right now you have 2 grand. Forget about the 5. Eliminate that number. Because the more you hold on to that 5,000 number and now you're at 2, the more you're going to start trading to make that money back. So you want to eliminate it. You want to say, in this term, you want to say, you know what? I had 5,000. I'm now at 2. I paid the market $3,000 to learn a very expensive lesson, and I learned it. Cool. I paid the market its fee. I'm done. Now, obviously, you don't want to think like that for your whole trading career, because you're just going to burn through money. Okay, you lost the first time, you lost the second time. Cool. Accept it and say, I paid the market their money. That was my investment towards the market. I gave them their money. I'm done. I have $2,000. That's it. Like, you have to convince your mind that that's the money you're starting with. So if I start with 5,000 and I burn my account to 2, what I'm going to say is, that was my fee for the market. The market took a 3 grand fee. That's what they take. Maybe a 5 grand fee. Whatever I lose, forget about it. Move on. I don't even know about the 2 grand. I don't even know about the 3 grand. Forget about it. Now, when you go to the next step, it's like, okay, I have 2,000. Now, obviously, one thing I messed up on was I was trying to make a lot of money in a short period of time. That obviously didn't work out. I learned that lesson, and I'm going to understand that lesson, because what happens with most people is, until here, they learn the lesson, but the moment they get in front of their computer, that lesson that they quote unquote learned or thought they learned disappears. You as a trader, you don't want to do that, because when you learn a lesson, you need that lesson to stick by you. Now, that's very hard to do when you're in front of a computer, because if you lost $3,000, $2,000, $5,000 because you overtraded, because you didn't have risk management, it's very easy to get lost in that when you are in front of a computer. So if you're someone that forgets, one thing I advise you to do is get a piece of paper, right? Get a piece of paper, and on this piece of paper, write down your problems. Like, write it down and put it like right in front of your computer. Like, put it right in front of your computer every single day. You read it, you fill up your mental bucket, and you say, my issues are this, my issues are that. You remind yourself and you keep it at the front of your mind every day that this is where I mess up. This is where my mistakes come in from. I need to be aware of this problem, because I promise you, when you are in front of a computer and you don't have something that's telling you like, hey, you're messing up, this is what you do wrong, you're going to forget about it. So having that in front of you will help you out tremendously, right? Me personally, my problem is I hated being wrong. I was like, oh man, I don't want to be wrong. My other problem was, every time I would lose money in the initial stages, I would constantly think about that loss. Even if I lost money yesterday, today I'd be like, oh man, I lost 4 grand yesterday. I need to make that. No, I forgot about it. So I would write about it. I would write down, today is a new day. Forget about yesterday. You paid the markets its dues yesterday. Focus on today. Your only focus on today should be marketplace, what the market presents. Don't chase. If you feel like you're chasing, walk away, right? So I had some of these things outlined for myself, and I would read it. I would read it to understand that, okay, this is where I messed up. These are my problems. You're gonna have different problems. The person next to you is gonna have different problems. But these are my problems. This is where I mess up. I'm very self-aware. These are things I need to improve, and these are things I'm constantly improving. And I'm also reminding myself on a daily basis so I can constantly improve them. Now, once you do that, once you have that in front of your computer and you reapproach the market, like I said, you have to reapproach the market with forgetting everything in the past, but not forgetting the mistakes, but forgetting the money, forgetting, you know, how much money you lost in the trade, how many times you were wrong, but taking it as a lesson. I know this is one of those things that it's much easier said than done. I understand me just saying forget about it. It's not where you click a button and everything disappears. I get that, but you really have to train your mind and convince your mind that that money and those losses are non-existent, and the only thing that is existent is the lessons you've taken away from those losses. Now, when you approach the market after a losing streak, after losing a lot of money, after blowing an account, you are not going to attack the market the same way or the same force that you did before. Why? Because you have to understand that your confidence level, if this is 0, that's 100, your confidence level is already way below 0. So your goal should be to bring your confidence level up. As you bring your confidence level up day in and out, and you constantly keep improving, that will help you as a trader, and that will help you slowly take on higher quality trades. Now, the confidence is very important because of this, right? Let's say you see a very high quality setup. Because your confidence is very low, this one time you might not take it, which is fine. It's okay. I don't expect you to magically confidence right away. Now, the next time it happens, you might want to take it. Now, when you do take it, you have to understand your position sizing has to be cut down. Your risk per trade has to be cut down. Every single aspect has to be cut down heavily. And as it's cut down, you need to slowly build that confidence up. And the only way that confidence will be built up is by you consistently trading, right? So if let's say tomorrow I take on a trade, I make money. My focus should be, why did I make money? What did I do right? What did I do wrong? Cool. Let's say I take on a trade tomorrow, I lose money. Okay, I lost money. Why did I lose money? What could I have done better? Was it a good trade? Was it a bad day? Well, bad trade. Okay, it was a bad trade. Shit, this is where I messed up. Or, wow, that was actually a good trade, good setup, everything, and it just didn't work out. It's fine, it happens, I move on. Now, as you do that over and over again with little position sizing, right, your count, when it goes from 5 to let's say 2, is probably going to stay around 2, because now you're not having like a 60% drawdown, which is huge on an account, because you're not taking massive positions. You're not taking aggressive trades. You're just learning that process. Now, after you get to, let's say, 15, 20 trades, and obviously you're at the final stage of the psychology part, you're going to notice that your trading starts slowly improving. Now, the issue that people have here is when their trading starts improving, where they mess up, so like, okay, my trading is improving, I'm doing everything right, and then your confidence level, which was under 0, right, goes to 100, and then boom, your account drops again because you're overconfident. So that's the downfall of it. The downfall of it is people start messing up because they have extreme confidence that this will either go this way or that way, because they've been right multiple times. Now, that's the problem with when people build up their confidence. Building up confidence is cool, but you also have to maintain it, and you have to keep it balanced, right? You can't have extreme confidence. If you have extreme confidence, bad. If you have little confidence, that's still bad, right? You want to kind of be like at a medium. You want to be somewhere here where I'm confident, but I understand I can be wrong. I understand that the market can go against me. I understand I should still implement risk management. I understand things can still go against me. When your confidence gets super high, you go, I'm not going to be wrong. I'm right. Buy more, add more to my position, right? And that's the wrong approach. So if there's someone, once again, who's having a hard time with this, you're not the only one. A lot of people, have a hard time after losing money in the market. It's very hard to reface it again, start it up again. It just pushes you way back. I understand that. But guys, if you are at that stage, take it one step at a time. Understand it's a process. And as you understand it's a process, lay it out, understand, identify the problem, and move forward one day at a time, and pick it up from there instead of just trying to make your money back. And as you do that, you'll start seeing more results and you'll start seeing more progress. All right, so that question is out of the way. Now, let me go over all the questions you guys have. All right, so, hey bro, my fear is when I buy a stock, I always fear it will drop very hard suddenly from Trump Twitter or market news. I don't know why, but I hate that every time when I trade. Okay, I mean, that probably happened to you one time, right? So the question that someone has is right here. Let me just put it up. So someone said, hey bro, my fear is when I buy a stock, I always fear it will drop very hard suddenly from Trump Twitter or market news. I don't know why, but I hate that every time when I trade. So this is probably happening to you because you're probably thinking this because this has either happened to you one or two times, right? So as humans, when something happens to us one time, we think it's going to happen again. We think it's going to happen again. We think it's going to happen again. It gets stuck with us, right? That's how our mind is wired. Our mind is wired on that instinct. Oh man, this happened that one time I traded. Okay, what if it happens again? I'm scared. You probably got caught up in a bad trade, and that's why you're creating that fear. You have to understand the possibility of Trump tweeting something or market news hitting while you're in a trade is very slim. Not saying that Trump won't tweet, not saying the market won't market won't come out with bad news, but the chances of, let's say, chances of that happening throughout the day at random times is very, very, very limited. Now, as it's very limited, you should cut that noise out and still focus on the chart. Yes, there are days where we can anticipate something's going to come out. There's some economic events that happen. Maybe some days Trump is speaking, some days Fed is speaking, Jerome Powell he's speaking. Now, when they're speaking, sometimes, yes, the market can be very volatile. But if they're not speaking and the market seems normal, I wouldn't even focus on this. But if the market does reverse either direction, you can always exit the position, right? So this is not something that should hold you back. And a lot of people, when they have that one or two issues that tend to hold them back, it's because it happened to them once or twice. So they think it's going to happen every single time. All right, next. Let me go to the next question. All right, so the next question someone posted is, if you're a new trader, what's the best thing to study as homework on a daily basis outside of developing the right mindset, which is the most important aspect of trading? Now, obviously, this is very important, but without the proper trading tools or knowing how to trade, this will not really matter. So your homework should always be, obviously, depending on what level you are at as a trader. If you're someone that has the education, you connected the dots, you know, like kind of what you're doing, your homework should all apply to your trades. You're journaling each one of your trades. Every single trade you're taking as a trader should be journaled. You should write down, why did I take this trade, right? And now when you journal it, there's a few stages of journaling a trade. This is where a lot of people mess up in journaling. Now, when you trade, there's before, there's during, and there's after, right? So there's before the trade, there's during the trade, and there's after the trade, right? So there's three parts of you. A lot of people, when they journal, they're just very focused on before. Hey, this is me, this is my plan, this is what I'm gonna set out. But what they don't understand is you as a trader, you need to connect all three. You need to connect the before, the during, and after, because each one of these stages, there's a different you, right? So in the before, it's very easy. Yeah, I'm gonna buy Tesla if it breaks 350. Cool, Tesla breaks 350. Okay, now what? You told yourself you're gonna sell it at 352, right? Okay, Tesla goes to 352. Now that's where during your whole mindset flips. Like, oh shit, I'm up $2,000. What do I do? And you start getting in a whole different element during that trade while you're in the trade, and that just kind of throws you off because like, okay, I'm up $2,000. Do I sell? Do I not sell? Okay, this was my original plan. Do I adjust it? Blah blah blah. So there's a different you during the trade. Now, once the trade is made, that's where also people mess up. They don't evaluate. They don't evaluate that this was my plan. The plan worked out. Did I exit? Did I not exit? Okay, I didn't exit. Why didn't I exit? Okay, this is why I didn't exit. How did I feel about the trade? Wow, I was supposed to make $2,000. I made only 400, right? Why did I only make 400? Oh, I didn't sell at 352. Okay, when I didn't sell at 352 and it went to 351, why didn't I sell then? Oh, because I wanted the $2,000, right? So these are things that you need to dig in deeper and understand about yourself as a trader on where these small mistakes you're making are happening over and over again. Why are you losing money, right? Another mistake that, you know, as someone journaling needs to be, what days are you losing money? Wow, Mondays I always lose money. Why do I lose money on Mondays? Because it's the beginning of the week. I'm trying to start the week off strong, or I lose money on Fridays. Why? Because I want to go out, I want to party, so I'm trying to make extra money. Whatever the concept is, but you need to understand deeper in your mind on what's the agenda your mind has that's not coming in front. Oh, I lost, let's say $500. I lost my wallet. I lost $500 in the morning. Okay, so today I had a bad trading day. Oh, because I was like, I lost 500 and I'm trying to make it back. And these are small things that people don't really pay attention to, but I promise they make a huge difference, right? Even with sleep. Oh, wow, the days I go to sleep at 5 a.m. and I wake up at 7 a.m., I think I'm superhuman, but I keep losing money. I need sleep. I can't function without sleep. My mind doesn't operate. No one's mind really operates without sleep. You need sleep. So these are small things that you, as a trader, need to understand, track, and kind of constantly keep improving. All right, next question. Literally nailed all my problems. That's good to know. All right, so I have 2 questions. All right, so let's break this down. Wow, that's big. All right, let's break these 2 questions down. Okay, so hey, I have 2 questions that are sort of similar. What should our environment be daily to become a better trader? I feel like my surroundings make me lazy and make me not care about anything, even kind of trading. Also, my diet, my physical and mental health. 2, I'm bad with self-discipline. I'm not consistent with meditating, eating healthy, working out, and learning. I'm constantly always trying to move towards watching Netflix, playing video games. What steps should I do to stay? What steps should I take to stay disciplined and keep being consistent no matter how lazy I feel? All right, so why is this not working? Is it blurry? Let's fix this. All right, so let me break this down. Now, if you're someone that's lazy, and I see a lot of people throughout the course, throughout the training, that are lazy, that are not consistent, and it's I get it, I understand. This is because we have something. You probably have something called a monkey brain, right? And you're not the only one. And it's not. I'm not calling you. I'm not saying anything bad to you, but so just hear me out. You probably have something called a monkey brain. Now, the way a monkey brain operates, you can look more into it. So this is for anyone that has a very hard time focusing, a very hard time doing productive work, being consistent, staying disciplined. If you're anyone that has a hard time with this, I'm pretty sure a lot of people do. You probably have a monkey brain. Now, a monkey brain is that your brain is kind of going all over the place. The reason that's happening to your brain is because of social media, because of our devices, because of phones, YouTube, constant alerts, all these things, right? So even if, let's say my phone is right here, right? Every second it goes off, let's just say I put it right here as I'm working, every 2 minutes it goes off, I look at it. So my mind needs that constant dopamine, right? And you guys can look into this, look into dopamine and all that. You need constant dopamine. So as you need constant dopamine, your phone provides you that, because if I go on Instagram right now and I get a like, or I see someone posted an Instagram video, that's gonna give me dopamine. As I constantly keep getting dopamine, my brain is gonna be focused on that and it's gonna need more of that. So whenever I try to do deep focus work, whenever I try to work, or whenever I try to focus on something that's gonna make me improve as a trader or anything else, my mind has a hard time doing that because I'm not getting constant dopamine. And that's why you're kind of getting affected in that aspect, even with trading or anything else. So what you have to do is you have to eliminate all these distractions. Like a lot of times, anyone that has my number knows this, I don't answer my phone like 90% of the time, it's off. Like keep your phone away, keep everything away or anything away that's very distracting or constantly gives you dopamine. Instagram, delete the Instagram app. Like if you don't need social media, if it's not benefiting you in any way, get off it. If you don't want to get off it, cool, delete the app and allow yourself 30 minutes a day to use it, right? Or any social media platform. Phone, turn off all the notifications unless it's like an important text from mom, dad, or someone important in family, right? So your phone doesn't constantly keep buzzing every 2 minutes. Like, oh, you got this notification, you got that notification. So you want to get out of that mindset. Now, to do that, you need to start meditating. Now, what you're trying to do, trying to go to the gym, trying to, fix your diet, all these things are great, but you're doing too much at one time. So what you want to do is you want to take a step back. And as you take a step back, you want to focus on one thing at a time. Now, one thing to focus on, my recommendation would be just focus on meditation. Focus on meditation and say for the next 20 days, all I'm going to do is, my only goal is every day I'm going to meditate. Nothing else. I don't care about anything else. I'm just going to meditate. If I can do this for 20 days straight, right? Every day, same time. I do it for 10 minutes. I do it for 15 minutes. Set a time for 20 days. After 20 days, now I add the next thing. Okay, now physical. I need to make sure I run 30 minutes. I go for a walk 30 minutes. In that walk, maybe listen to an audiobook. In that walk, maybe listen to a podcast. So now you're getting two things combined. Once you do that, now you have two things outlined. Then you add the third. It becomes a lot easier to do that. Now, as a trader, you do need to have a lot of self-discipline. You need to be very consistent and so on. So if you don't have any of these, right, if none of these are existing within yourself, you're gonna have a very, very hard time trading. Like, I think if this is you right now, like, don't even fund a real account. Like, take that advice and don't even fund a real account. Just go back, figure this out, learn more and more trading, and then once you become consistent, once you have more control in your mind, then start trading. Because if you don't have self-discipline in your personal life, the moment you go to trading, it's gonna show. It's gonna show when you should trigger. It's gonna show when you should take a loss. It's gonna show during those times, right? So you, as a trader, wanna make sure that this is established before you move on. And that's why a lot of people aren't able to cut losses, follow their plan, because they're not disciplined. Trading requires a crazy amount of discipline, a crazy amount of work ethic for you to say, you know what, this trade's working out, enter, exit, whatever the case is. Oh, the trade isn't working out, I should get out, cool, get out. Having that emotional discipline, having that control is very, very hard thing to do, and a lot of people don't have that established in trading or even in their personal life. So that's one thing you should do. And if anyone else is having the same problem, figure this out, fix this before you fund an account, because if you fund an account, you're gonna have a very hard time progressing and growing that account without any sort of discipline. How to stay away from revenge trading? Okay, next question. The next question is, how do I stay away from revenge trading? It depends on how you're going about it, right? So sometimes as people are trading, like for example, with me, my revenge trading, when it does happen, it has happened a few times, it happens in like a way where I don't feel it, right? But I understand when it kicks in. So for example, let's say I trade, I'm down $1,000, right? I trade again, I'm down 500. I trade again, I'm down like 3,000. Okay, cool. I'm wrong 3 times. I'm down over $4,500 for the day. Okay, right away, I need to acknowledge why. What the hell's going on? Sometimes the market's just choppy and I'm just taking stupid trades. Sometimes this bad trade came from that, this bad trade came from that, and it becomes a domino effect. If you feel that happening, and I felt this sometimes, and some days I don't feel it, shut off your computer and walk away. The most simple thing ever. Shut off your computer and just walk away, because in that moment, since you're caught up in this circle, you're not thinking straight. And since you're not thinking straight, you're trying to make that money back, and you're not understanding that you're revenge trading. So you're not even self-aware at that point. So best thing to do is just shut off your computer and leave, right? Second thing is you should have a daily max loss limit. That, hey, if I lose $2,000 a day, depending on your account size, obviously if you have a $4,000 account, you should not lose $2,000 in a day. That's 50%, and that's a lot, right? You should have a daily loss limit that, hey, if I lose, like for me, my daily loss limit is 10K at this moment. I had it at 5K before. I have it at 10 now. So hey, if I'm down $10,000 for the day, get out, walk away, leave. Doesn't matter. Don't even try to make it back. Doesn't matter if there's an option. Walk the hell away, leave, right? I've noticed a lot of time when I don't leave, it just goes like that. I end up losing a lot more. So I leave. So if you're ever in a situation where you feel like you're revenge trading, walk away from the computer. Now, if you feel like you're not revenge trading, that's why you should have a daily goal, a loss goal. So if it hits that goal, shit, I'm getting up, I'm leaving. That's going to keep you in the game longer, because once you're down $2,000 and once you get to a certain loss limit, you start trading worse because you already lost. So your feelings start going down in one way, and then your feelings also go up in a way where you're trying to make that money back, but you're also very numb because you lost the money, and that starts affecting your next few trades. Okay, another question. All right. Hi, Umar. So I initially lost half of my account in a matter of a couple of months and was able to bring it back in about 1 to 2 weeks. Then I became too confident and blew the whole account plus more. I know you said not to fund your account, but how do you recommend taking a step back and getting back into it? So if anyone was in during the beginning of the webinar, this is exactly what I explained. People lose money, right? They make the money back, and then they become too confident, and then they blow it again. So like I said, the confidence meter, this is 0, should stay in between here, right? Your confidence meter, the moment it even goes very high, that's bad. Like for me, whenever I feel my confidence meter going up very high and I'm super confident and like things aren't working out, I am not trading. I don't care. Like I don't care what's going on. I am not trading, because when you get super confident, those trades that are not even that great look like the best trades in the head because your mind is now lying to you and it's playing games. So it's like, wow, this is the best trade, but you're so zoomed into this that you don't see the bigger picture, right? So that's one. Now, not to fund your account. Now, if you blew the whole account and your account's at 0 or close to 0, at that point, yes, you're kind of going to need to fund your account, right? Obviously, it's different if you start with, let's say, 3 grand and your account goes to, let's say, 1,500, but it also depends on what you mean by you blew your account. Now, if you started with 3,000 and your accounts are like $300, $200, yeah, at that point, you're probably going to have to fund your account. Now, when you fund your account, whatever amount you lost, as I mentioned before, forget about it, destroy it. You paid the market its fee, you paid the market its commission. Now it's time for you to move forward. Move forward from that. Now, as you move forward, why did you lose money? That's the first thing. You should know that. Like by now, you should know why you lost money. The second thing that you need to know is why or how did you make the money back? Did you get lucky? Because there's certain plays people kind of get lucky. Did you get lucky? Did you know what you were doing? The third thing is, why did you blow it again? Was it the same reason? Right? If it was the same reason, you're not progressing at all. This is your growth as a trader. You're not really moving anywhere. So it needs to go back to, okay, why did I lose money? This is a whole process. You're digging down, you're evaluating, you're going into step by step. Why did I lose money? Okay, this is why I lost it. Go through all your trades. Okay, cool. Why did I make money? What happened? What did I do right? Did I do something right? Do I even know what I did, or did I just buy, sell, and I got lucky? Okay, cool. Now, why did I lose money again? Evaluate. Once you understand why, you know, all 3 of them, then you say, okay, I wrote it down. I have my rules. I know where I mess up. I understand myself more and more. Okay, this is what I'm going to follow. Refund it. Take it slow. I'm going to take it slow. I'm going to size down and I'm going to get into my groove. And then once I build a cushion, once I build consistency, then I can start trading normal again. Until then, I need to understand when I make money, my trading gets worse because I get overconfident. So these are things that you need to kind of pick as a trader and kind of break down one by one. And as you break them down more and more, you'll start getting a much, much better idea of them. But yeah, fund your account, understand the problem first, then fund your account, go back into the market one step at a time and take it from there. All right, next. Hi, Omar. When you're entering a trade and you're expecting a move and it doesn't happen right away, how do you maintain your mind calm to hold through pullbacks before eventually it moves your way? I seem to get shaken out a lot when this happens. All right, good question. So now this happens to a lot of people. Let's break down a chart. Let's say this is a chart. Let's say this is $10. Let's say this is, I don't know, $9.70. Okay. Now, in this stage, right, let's say I told myself that I'm going to enter the trade at 10. I'm like, hey, if the stock breaks 10, very simple explanation, but if the stock breaks 10, I'm going to buy 100 shares, or I'm going to buy 2 calls, 3 calls, whatever. Stock breaks 10. When I enter, I should know one thing already. Where do I want to exit? Now, when I say where do I want to exit, my exit point might be under 970. I might tell myself that if I'm trading off, let's say, a 5-minute candle, for argument's sake, if I'm trading off the 5-minute candle, my entry point will be if the 5-minute candle closes, right, under 970, right, I'm out. I'm day trading. If it closes, meaning it closed, this is a 5-minute candle, it closed under 970, I'm out. Now, when I do that, I'm also establishing, before I take on a trade, what my loss is. So in this situation, if I buy 100 shares at $10 and the stock goes to 970, I lose 30 cents. If I lose 30 cents per share, that's about $30 on the trade. So when I take this trade and I trigger it, what I have mentally accepted, which allows me to stay calm, is that I lost $30. Hey, I bought the stock, I lost 30. It's gone. $30 is gone. 40 bucks, whatever, it's gone. What a lot of people do is when they enter, they're like, okay, I'm going to buy it at 10. I'm going to sell it at 11. I'm going to make $100. So you've already told your mind you're going to make 100. So your mind is expecting that. So when it fails or when it's going against you, you start panicking because you see red. I already told myself that I'm going to see red. I already accepted the red. I'm losing 30 bucks. Cool. I went into this trade Fine. I'm gonna lose 2 grand. I'm gonna lose 3 grand. I've accepted it. Fine, whatever. Oh shit, no, I didn't lose 2 grand. I made 4. I made 5. Phenomenal. Move on. Mentally, I accept it. So what you got to do first is accept it. After accepting it, the second thing you have to do is you can't have your expectations where it's going to go to 12, it's going to go to 13, and I'm going to make an X amount of money, because that tends to mess with you very, very hard. After that, a second thing to do, if you are day trading and you're trading on a smaller time frame, one good thing to do is talk to yourself, right? Just stay calm, talk to yourself, because the problem, what a lot of people don't understand, is when you're trading and you start moving and you start breathing heavy and you start getting panicky and you start getting antsy, your body can't see that, but your body feels that you are in danger. So there's a lot of things that trigger in your mind that cause you to overreact, that cause you to panic, that cause you to freeze, which is called the flight, freeze, or fight mode, right? So you either fight, you either flight, like you take off, or you freeze, meaning you don't know what to do at that moment. So that causes you to mess up in the moment because of your reaction, because of what you're thinking. Oh man, I'm down 30 bucks. Oh man, you start overreacting. But if you're calm and you're like, all right, I told myself I'll lose 30 bucks. It's going up, it's going down, yada, yada, yada. I've accepted it. Just becomes a lot more easier at that point. But when you overcomplicate it, this becomes very, very hard, right? So just take it down a notch. And obviously, if you're taking on a position, you get very nervous, you're probably trading too large. Like if I take on a trade and I'm losing 30 bucks, I don't care. Like I'll be honest, I don't care. But now if I take this trade and I'm losing, let's say instead of buying 100 shares, I buy 10,000 shares, right? And I'm losing, I don't know, $3,000 on the trade. Even though it's the same trade, I'm gonna panic more. Oh man, I'm losing 3 grand. Now, if you look at it, it's the same difference, same trade. But losing 3 grand and losing 30 are gonna give me different emotional levels. So that's where you find the medium on what your mind and body can kind of control and not really panic. Now, if I get into this trade and let's say I'm losing 30 grand, if it goes to 970, I'm gonna mess up, because the moment it goes down 10 cents, I'm down 10,000. I'm gonna go, oh shit, I'm down 10,000, fuck. And it's messed up. So you also wanna find that medium. So if you're panicking or you're getting shaken out, your position sizing is too large, you're probably anticipating a lot of money on the trade and you're not really locking in the downside in your mind. All right, next question. I lost 5K and now I'm making it back, but $120 a day. How can I get out of this feared mindset? It's not gonna happen right away. So it's kind of think about it like this, right? In simple terms, think about it like this. Think about an athlete that can run, I don't know, 20 miles, right? Without kind of stopping. I don't know how long people run, but let's say 20 miles, because I can't run 20. Let's say you run 20, an athlete can run 20 miles consistently. Now, let's say the athlete gets injured, he or she gets hurt, right? They sprain their ankle, they rip a muscle, whatever, something happens, okay? Now, when they come back, how do you think they're gonna get back to this level again? You think it's gonna happen in a month, 2 months? No, it's gonna take time. So, okay, you're making $100 a day, you're building progress. Now think about it. Think about what's gonna happen when you consistently do that for months and months and months and out. You're gonna be able to do this right back again. But if you try to run the same mile, you try to run 20 miles again without you being at a perfect form or perfect level, you're probably gonna hurt yourself again and you're gonna have to start again, right? So look at even basketball players like Kevin Durant. He hurt himself, he's out for the year, right? Now, if he comes midway throughout this year, maybe he can probably come back, I don't know, but let's just say he does come back, he's not at a full form. So he's putting himself in danger, like he came back in last year's finals game, right? He came back way too early. So when you try to do that, you're just gonna hurt yourself more. So if you're making $120 a day, you lost 5K, cool, forget about this. Forget about the 5K, just keep trading the way you're trading. If you're making $120 a day and you're doing it over and over again, good, that's phenomenal. Forget about the 5K, forget about the loss. Destroy it, because that's gonna hold you back. Like, you need to accept that, destroy it, and move forward from that. All right, next. All right, so hey man, I'm struggling with choosing between day trading or swing trading. How do I determine which is best for me? I feel like if I swing, it's smarter to go in with lower shares. The result is that the outcome will be less. Okay, so 2 things. Like me personally, I used to swing trade very, very heavy, like about a year and a half ago or so. But market became very volatile, so there's a lot of opportunities in day trading in my opinion at this moment. But that also depends on you, right? So if you're someone that can, be in front of a computer between a certain time, and you're someone that can handle the market movements up or down, cool, day trade. If you're someone that can't, and you're like, okay, I like swing trading, I'm actually doing a good job at it, I'm finding good plays, I'm able to hold it for a longer period of time, swing trade and take it from there, right? Yes, swing trading will be slower, the outcome will be less, but there's obviously benefits and positives to both. This requires you to be in front of a computer during a certain time. There's obviously a little bit more risk, higher chances of losing money quicker because of the constant movements. This is going to be a little bit slower, but you don't have to be in front of a computer each and every single day. You can set up your orders, like for example, Apple. You got an Apple at $210, you're holding till 265, right? You didn't do anything in between, but you were still able to make a large amount of money. So that kind of depends on you, on what your trading style is, what you like to do, if you can day trade, if you can't, how your emotions are with day trading, and how you're actually doing with swing trading. Like for example, I know some people that can hold and find great plays, and they can hold them for 2-3 nights, and they can't consistently make money. But they're like, no, I want to day trade. But when they day trade, they mess up because of their mind, and they're not able to adapt to either or, so they end up messing up whenever they convert over to day trading. So that depends on you and how you have been day trading, right? Same person question didn't finish. Right, same person had a question. But if I do day trading, I can buy more shares and hit targets faster. Yes, I know that. It can flip on me and I can lose more, but assuming I'm always cutting losses short, I feel like that would be better. How do I choose? Or even challenge myself to become more of a swing trader? This is easier said than done. So if you do this and you do a good job at it, then day trade. I mean, if you're able to, if you're saying this, like, and obviously, like I said, it's easier said than done. If this can be done, cool. I recommend do this. There's a lot of opportunities in the market. But if this is something you try and you can't do, then go to swing trading. So that just depends on you trying this. This is very easy to say, but like I said, doing it is hard. But if you try it, see how it goes, see how it feels with real money, not paper money. And then if it works out, cool, phenomenal, you progress from there. If not, you don't like it, you can focus more on that. Next question, do you recommend meditating in the morning or before we sleep? I tried meditating after I woke up in the morning and fell asleep. That's because you're probably still half asleep and you're probably doing it on your bed. If that's a situation, wake up, take a cold shower, come sit down on a chair and do it there. Don't wake up and just do it on your bed. You're already half asleep and you're probably gonna go back to sleep, right? So if you're trying to meditate in the morning, get up, take a cold shower, go down, sit in a chair afterwards and meditate there. I recommend doing it in the morning because in the morning it just aligns you very, very well, especially before the trading day. But if you do it before you sleep, you're just gonna get a higher quality and you can higher quality sleep, and you'll be able to go into deep sleep more. 10 minutes. Why not do both? Depends on how quick you want to move forward and how quick you want to evolve your mind. But 10 minutes each day, 10 minutes in the morning, 10 minutes at night. I mean, I would recommend doing both. All right, another question. Guys, I'm going to take 3 more questions and then end it. Okay. Hey, Umar, I have been trading for a couple of years now, but I'm very inconsistent. I feel like I have a lot of distractions, like trying to balance marriage, 2 young boys, and just other responsibilities. Then I stay up till late at night trying to study an online course, so my sleep is a big problem for me too. Any advice on how I can balance my schedule better and at the same time become a better trader? Thanks, Umar. All right, so now, obviously, like this is something I used to mess up on a lot, guys. Sleep. Very important. Like 2 years ago, 3 years ago, my mindset was kind of like, oh, why sleep? Sleep 2 hours, 3 hours, sleep at 4 a.m., wake up at 7 a.m. Oh, it's so cool. I don't need sleep. I can, all this nonsense. But the deeper you look into it, you'll realize sleep is very important. Like, it's super important. Like, you should be getting a required 7 to 8 hours of sleep, depending on what you need. This is not something that should be neglected, because if you neglect sleep, that's going to affect every other aspect of your life, and that's going to be lower quality. I'd rather increase this and cut one of these things off so I can get a higher quality of 2 other things, right? Now, the first thing you need to do is, if you're having this problem, right, you're probably not good at time management. I'd recommend you focus on making a schedule, right? In that schedule, look at where your time goes. So like this whole week, track your time. Where's all my time going? When am I sleeping? I sleep at 10, I wake up at 8, right? I'm sleeping for this large amount of time. I'm working from this time to that time. I'm on this day, I'm doing whatever the case is. lay it out and see where your time is going. A lot of times, because we have a lot of tasks, right? We have, let's say, 10 tasks or 10 things to do, whatever the case is. We think that's so much, but if we really put it down on paper, this might take us 20 hours throughout the week, and most of our time is just dreading this. So you want to lay out all your responsibilities, lay out what you're doing, see if there's anything you can cut out, see if there's anything you can kind of combine in one and make it better. Like, for example, reading. A lot of people are like, oh, I want to read. Cool, you want to read? I don't have time to read. Okay, get an audiobook. Go to the gym, run. You're helping your health and you're learning at the same time. You're getting two things at once, right? So it's like combining stuff. If you have a commute to work, you have a commute going somewhere, audiobook, podcast, read a book there, whatever the case is. So it's like you just gotta work how to implement both of those, and you really gotta pace yourself. I think a lot of people, their problem is they don't pace themselves well. They try to just quickly accelerate through everything, and they try to do too much at one time. That's like when you get on a motivation high and you're like, oh, I'm so motivated. And as you get motivated, one day you want to do everything, and then when the motivation dies out, you do nothing. So pacing yourself, identifying where your time is going, and fixing one thing at a week. Like, don't just try to become a new person starting Monday. It's not going to happen. It'll happen for 1 or 2 days, but one day at a time, fix one thing, adjust your time, and just make a solid plan and adjust that plan on a weekly basis and say, where am I? How far do I need to go? And just take everything from there one step at a time. What time do you find effective to meditate? Like I said, I do mornings. Sometimes I do nights, not every time. And I do about 10, 15 minutes. All right, next question someone has. Hey, Umar, I opened up a little topic under Traders Lounge in our Traders Forum about discipline. Yeah, I saw that. The main idea is to comment what we want to work on and improve and hold each other accountable and report our progress within a week. For your information, for anyone interested in working and developing discipline. I was thinking of doing something like this within the community. That's actually a good idea. I was thinking of adding it in Discord, and everyone can post their progress on a daily basis. So I'm gonna implement something like this in Discord starting this weekend. I'm gonna where people meditate, read a book, read something that's just trying to improve our personal life. So I am gonna do this, but I'm gonna set it up in Discord. I'm gonna have like a separate section there, and I think it'll be cool for everyone just to post their results on a daily basis and just kind of hold everyone accountable and hold themselves accountable. But I really like that idea. All right, I'm going to answer the last question. All right, last question, and then I'm going to end it right here. All right, what would you say about a trader who's constantly breaking even? What do you find the issue to be for these type of traders? When you say breaking even, like on your trades, you're breaking even. Okay, so it goes down to this. If you're breaking even on all of your trades, go back to the trade and see what happened next. So if, let's say on Monday, I sold the stock at $92, or I got out of an option contract when the stock hit 92. Why did I get out at 92? I thought it was going to go down. Maybe I didn't think it was going to go higher anymore. Maybe I thought it was going to be flat. Whatever the reasoning is. What happened after I sold? It went up. It went down. Now, if it went down, obviously great execution, great exit. But now, if let's say out of your 20 trades, 16 of them kept going up, you need to understand, why are you selling? Now, the reason you're probably selling is you probably see a little bit green, or one main reason a lot of people sell and they're breaking even is when they enter a trade, the stock goes against them immediately. So they're down $200, and then when the stock comes back, they see it's zero, or they see green and they see plus 10, and they're like, oh my God, I saw negative 200, I now see plus 10, exit, right? And that just tends to destroy people. So I think I would probably assume that's the issue, but I think going back, a good thing to do is kind of like break everything down and say, you know what, where am I messing up? What's happening here, right? Like, what happens after I sell? Does it go up? Does it go down? How many times? Go back to each one of your trades, understand that. And then when you sold, I want to understand your mindset. And then also look at the trade when you were in. I got in here, I was down, I sold. Why? Oh, because I was down a lot of money at a point. So when I was green, I got out. And you're probably going to see that's probably the reasoning, reasoning on that happening over and over again. All right, guys, so that's it for this webinar. Like I said, I'm going to open up something new in Discord where people can hold themselves accountable on discipline, meditation, and so on. I'm going to set that up this weekend. So, everyone in the community can just kind of post their progress. Not anyone's going to follow up, but just to kind of, see what's happening within the community and just hold themselves accountable and build from there. I'll keep you guys posted on that. Good luck on trading tomorrow. Have a great weekend, and I will see you guys on next week's webinar. Thank you.